Financial markets for the past week or so, even longer, have really been Trump trade, Trump trade, Trump trade. Jay Ann Seltzer comes out over the weekend and says, hold my beer. You might be wrong, because I have Harris up 3 points. In September, she was down 4 points to Trump in the same exact poll. And then back in the summer, it was double digits in terms of how much Trump was winning that state. Cook Political Report has this state as solid red, but she's seeing something right now in this early voting and in this part of the electorate that maybe is foreshadowing what could happen in neighboring Wisconsin, which is part of the blue wall.
Something you might see developing through Tuesday night into Wednesday morning. Let's talk about the Trump trades. Investors walking back bets on a Trump win as the latest polls give Harris a slight national edge within the margin of error. Stephanie Roth of Wolfe Research weighing Trump's economic plans, saying tariff policy is one of the most underappreciated risks of a Trump administration. Although CEOs are worried about the potential impact of tariffs, they aren't doing anything about it yet. Stephanie joins us now for more. Stephanie, welcome to the show. Just elaborate on that a little bit more, because we talk about tariffs every single day. What is underappreciated about it?
Well, a couple things. One, if you look at imports from China, you certainly haven't seen companies front-loading that, right? If you ask CEOs, they say that's one of their most concerning risks out there, but then they haven't actually been stockpiling as a result. And then if you look at some of these Trump baskets, yeah, especially the ones that are impacted by tariffs, yeah, they've moved a little bit, but not truly pricing any sort of significant tariff risk.
What do you think the economic consequences would be?
So the way we're modeling it is about a 1% hit to GDP, 1% boost to inflation. And that's in a pretty modest scenario, one where if we got China tariffs up to 60%, you would have a significant reduction in terms of imports from there, in which case that would mitigate a lot of the risk.
So what's the argument? How much credence do you give the argument that if you put tariffs into place, you actually see growth come down? Because activity really declines. We saw that with the washing machine example. When Donald Trump was president, tariffs on washing machines, and people bought fewer washing machines, and they didn't really need to upgrade. I mean, how much is that going to be what we see with tariffs also, which makes this harder to model?
So if it ends up being just a 60% tariff on China, we can kind of mitigate that to some extent. You would see a significant reduction in terms of imports from there, and we would see goods, pick up elsewhere. If it ends up being a 10% across-the-board tariff plus a 60% tariff on China, that would be a headwind on growth. So that's that kind of 1% hit to GDP type of scenario, and it could be even worse. This is a stagflationary type of policy. It's not good for economic growth.
How much pushback do you get from people saying, really, you take these seriously? You think that this actually could be policy rather than just a negotiating tactic?
Yeah, people say that all the time. Well, it won't be that bad, or maybe it won't happen. It'll be negotiating. But we have, he did it the last time, and we have to take it seriously. Granted, the one thing to keep in mind, though, is we don't think it will happen until later 2025. So that when we're thinking about the next year and Fed policy, that's probably not going to be a real conversation for next year. This is a 2026 kind of thing. And by the way, the Fed can't really forecast these things, so they're going to have to just take the data as they come.